Well, it's very much steady as she goes here in Asia. We're seeing a reactive session, certainly a money flowing back into the banks again. That's the trade du jour at the moment. Everyone seems to want to be long financials. Japanese financials really the place to be in Asia today. Certainly, if you look at the yield curve, they're steepening significantly. You've got the 30-year, the ultra long end up at 56 basis points, which is the highest level since September. Really, really positive for Japanese banks because they borrow very much at the short-term maturities. They'll lend and they base their loans off the longer end of the curve, the 30-year or so. And of course, that differential between where they borrow and where they lend out to is, of course, where they make their net interest margin. So if that's steepening and widening, you are seeing potentially more profitable banks. And really the best macro trade out there for playing the big thematic at the moment, which is selling fixed income because of higher inflation expectations around the world, but specifically that of the US, has to be Japanese banks. They are flying at the moment. US banks, if you look at the XLF, which is the US bank ETF was up 11% last week. So they're the vehicles that people are playing this market out at the moment. Obviously, people have been long US dollars, short gold, short EM as well, very much in this big macro trade. But we are seeing some buying in US fixed income. The 10-year yield's down about 5 basis points, and that's halting some of the gains we've been seeing in the dollar. If you look at dollar yen, it traded about 30 pips lower earlier in the session, but it's come back again. We're not a million miles away from the highs on the day. Dollar yen still looks like it wants to go higher. Every pullback seems to be very, very shallow at the moment, and that's a very positive sign for people who are long dollar yen in this environment where everyone's so focused on fixed income and what Donald Trump and the team really bring to the future inflation expectations of US markets. Here in Australia, we've seen the market under a little bit of pressure, I think predominantly because we are seeing rebar and iron ore futures under a little bit of pressure today on the Dalian exchange in China, and so the mining stocks, which have done very well this year, are under a little bit of pressure, but certainly the banks are pushing up as we go into the back end of the day, and we're seeing that's really stabilising the market because the top 4 banks are 30% of our index. So mining stocks under a bit of pressure because we're seeing bulks under a bit of pressure as well, and money flowing back into Australian banks, which probably don't benefit from the yield curve as much as Japanese or US banks do. We're very much beholden to what's happening in the wholesale market for funding. We're seeing oil futures up strongly as well. That's one to put on the radar. There's a goodwill towards this OPEC meeting we've got in November, and there's a belief now that everyone's saying that we could get supply side cuts coming through there as well. So oil prices are starting moving up, and that's one for the radar at the moment. That's pushing some bid into the Canadian dollar and some of the other petro currencies as well. So certainly everyone watching what's happening in the oil complex as well.